Hey, it's Larry Gonzales for your housing market update for the last week of June. It's been a pretty good month overall. We've seen rates come down from the near 7% VA down to mid sixes. Friday, the last working day of the month, we should see some good movement. We're going to see movement. I just don't know which way it's going to go. But let's get into the market as of today, Thursday, the 27th. Got a big presidential debate. Who knows? That might move the market too. All right, housing market, the big three. Prices are up. We'll get into that. Inventory is up as well. And then rates have been flat all week, but hey, flat is better than rates going up. So let's get into the big news. Home prices keep going up. We got the Case-Shiller Home Price Index came out. Get into that. New home sales and pending home sales both show a lag. They're both slowing down. We'll look at that a little bit. And then initial jobless claims. Initial jobless claims are showing a labor market that is slowing down. All right. So let's get into the first one. Case-Shiller Home Price Index. This is the gold standard for home price appreciation. And 4 months 2024, 4 months all showing positive movement. We are on pace for a 4.4% year for 2024, 4.4% appreciation. Year over year for April to April, 6.3%. So that's another great positive number, just off of our high of 6.5 from last month. And what this is showing, hey, is there's a strong demand and a tight supply of homes. They are offsetting this high interest rate environment we've been in. All right, but let's take a look at inventory going up. We got two reports, new home sales. New home sales shows a drop, all right? Rates are keeping new home buyers on the sidelines. Let's look at new home sales. Typically, the builders have incentives in incentivizing their buyers to buy. You know what? They're just not buying right now because of these high rates. Signed contracts plummeted to a 6-month low in May. All right, a drop in 11.3% in home sales for the month. We're down 60.5% year over year. If you look, we're seeing a slight increase. All right, and that's obviously due to a lack of sales. But of those 481,000 homes, only 99,000 are complete. So less than 100,000, less than almost 20% of those homes are even completed. So just something to keep an eye on. If rates go down, we'll see that change, though. And let's look at pending home sales. These are homes that are actually in contract right now as of May. And we had another decline in May, down 2.1%. It's because of sustained high rate environment. You can see, 2023 index is 76.5. We're now at 70.8. We might see it go up, but it's going to take lower interest rate. Let's look at initial jobless claims, all right? Initial jobless claims, while week over week we saw a drop of 6,000. Continuing claims are up 18,000. We've inched up to 1.839. We're getting closer to 2 million, but we're not quite there yet. Once we start seeing continuing claims at that level, and you're going to start seeing a Fed that's going to start looking at cutting the Fed funds rate. And we need to get that unemployment rate up. It's at 4% right now. Next Friday, we'll have that big number. Will it be 4.1? Will it be back into the threes? We don't know yet. But what this does show you with the initial jobless claims staying a little higher, not a lot, is that the labor market is showing some weakness. All right, you got VA rates. All right, the month of June has been very good for interest rates. We've seen them drop from the, certainly VA, the high sixes down in the mid sixes. And tomorrow we're going to see movement. We're either going to go back up into the high sixes, or we're going to go into the low sixes based on this PCE, the Personal Consumption Expenditure Report that is coming out tomorrow. So we should see some movement, and all signs are that inflation report should be a little cooler than expected than last month. So remains to be seen. All right, it's all about the numbers. It's all about the numbers. All right, so what does this mean? Well, hey, because of what we've seen, interest rates coming down in June for the third week in a row. All right, mortgage applications increased. All right, inventory is still high on the leeward side. Inventory is still at really the highest it's been since before COVID on the island of Oahu. But in particular on the leeward side, we're still really resource constrained up in Mililani, Kaneohe, Kailua. If we get positive news over the next couple of weeks, you're going to start seeing that inventory come down again. All right, once we get squarely in the fives and for VA, my friends, you're going to see inventory drop. That's what happened last year, January, February, March. We saw a huge drop in the inventory of homes once rates got back into the fives. We'll see what happens this year. And for sellers, the value of the home, don't take this personally. It's not that the value of your home isn't what you're putting on the market for. The problem is it's the affordability for the buyer. So in areas like on the leeward side, where your home's been sitting a little longer, don't take it personally. It's not the value, it's the inventory. Don't drop your price. That doesn't really save the buyer too much. Give them a credit. That makes that home affordable. All right. So parts of the island, though, Mililani, like I said, Mililani, Kaneohe, Kailua, you don't have to worry about that. Your home's going to sell just because those are areas where there's such an inventory constraint. So that's really all I have for you this week. Keeping it short. Guys, hope you have a great weekend. We're getting close to the 4th of July. A lot going on. Have an awesome weekend. All right. Aloha.